Well, the US dollar has hit its lowest level since 2022, highlighting growing economic concerns. But this green lights more gains ahead for gold. My name is Jessica Amir, a market strategist here with Mumu. It's great to have your company on this third day of June. Well, big tech stocks like Meta and AMD, they led the charge in the Nasdaq-100 overnight. Both of those stocks gained 3.5%, and they fueled the Nasdaq-100 higher. It's not quite back at record all-time highs, though, but it's not far off. It's about 3% away, which is great news. Broadly, though, we did see steel and aluminium, you might say aluminum stocks, they charged the most in the S&P 500, and that's really because Trump announced 50% tariffs on steel and aluminium that'll kick in on June 4. Now, this saw US producers such as Nucor and Steel Dynamics really punch the lights out overnight. Their shares doing exceptionally well, jumping up 10% respectively, but do keep in mind they do have some clawing back to do, as we can see from the chart. Meanwhile, the news of higher tariffs on aluminium and steel wasn't really good for other companies that are going to be paying the brunt of these tariffs, such as Google and Tesla. They feel, of course, aluminium is the key ingredient in lightweighting an electric vehicle. And of course, aluminium is also key in chips and data centers. So that's what traders will be considering as well. Again, probably focusing on quality companies that can pay these higher tariffs and sustain them while growing their profits. That's the key. Let's get to the US dollar, which I'm sure you're chomping on the bit, eager to know what is going on. So the US dollar has continued to die. We've been speaking about this for some time. Now, this is all on the back of a slowing economic growth in the US. That's why we're seeing the US dollar at its lowest level since 2022, just outstanding. Now, the US dollar, you're probably going to be expecting to see this at lower levels, and that's for several reasons. One of those is because Trump's trade policies. Secondly, we've got incoming tax policies. That's thanks to Trump's big, beautiful bill. But I think the fact that we do have a falling US dollar really reflects that people like you and I and global governments around the world, we're all losing confidence in the US government in itself. We're losing confidence in the US's government's ability to repay back their debts. And that's why many of us are simply not buying US government bonds anymore. So this is what this chart reflects. Don't forget that Moody's, the rating agency, the third rating agency, downgraded US government debt. Now, that's another reason the US dollar is continuing to lose its privilege. Remember, in financial markets or in the financial world, we previously deemed the US dollar as a safe haven. But as we can see from the chart, it doesn't look like a safe haven to me. But there's always a bull market somewhere. When the US dollar declines, guess what goes up? Well, gold. They've got an inverse relationship. And that's been standing the test of time throughout history. This is why I think you should be keeping your eyes on gold stocks, and gold itself. Now, let's have a look at the chart of Newmont. Newmont, obviously the world's biggest gold company. Thanks for your patience. For those of you who've heard me bang on about this stock for a very long time, but overnight it was one of the best performing stocks in the S&P 500, and sure, you'd expect the locally listed Newmont to lead other gold stocks higher today. Now, this sets a pretty bullish tone across the Asia Pacific today, but all in all, the Aussie share market is expected to nudge up about 0.9%. That's what the futures earlier suggested when we think about the Aussie share market in its entirety. But we do need to just be mindful of a couple of other things that are rumbling in markets at the moment. There's a couple of schools of thought that investors are, I guess, toying with. Now, the first one is that investors are really focused on the fact that tariff deals are getting done. And we also know that markets have always recovered from trade wars. We saw that with Donald Trump's first induced trade wars, didn't we? And so, yeah, sure, tariffs are likely to dent global growth. And Trump has now overnight extended his pause on Chinese tariffs right through to August 31. So this is a boon or a tick for risk on sentiment. as in buying those stocks that typically do well when risk is high. Now, the second group of investors are seeing the harsh reality of tariffs hitting consumers, and they're hitting workers the hardest. Now, ultimately, this is going to rise unemployment. So that's not very good. Overnight, we saw a prime example of this, Microsoft, obviously the equal biggest company in the world. They're cutting hundreds more jobs after they cut 6,000 jobs last month. Disney also joining in the job cutting camp. They laid off several hundred employees across their film and TV business. Of course, they've been hit by tariffs as well. But why are we highlighting this? Perhaps another way to think about this is in Australia, I just wonder if we'll be seeing unemployment rise here too. Perhaps that's why our forecasts are suggesting that Australian unemployment will rise to 4.3%. This is all while, of course, we've got our politicians squabbling over some bizarre double tax on the superannuation system, taxing superannuation balances above $3 million. Plenty to consider as always. Keep your eye on gold and the US dollar and their interesting relationship.